Welcome to Pinvest.TV, India's first real estate channel. Let's dive into latest property news from international market. In the third quarter of 2024, the commercial real estate lending market in the US experienced notable growth, according to CBRE's latest research. Acquisition financing saw a significant boost, with loan issuance increasing across various asset classes, particularly in major office transactions. CBRE's Lending Momentum Index, which tracks the rate of CBRE-originated commercial loan closings, rose by 13% from the previous quarter and 15% year-over-year, reaching a level of 214, close to the pre-pandemic 5-year average of 229. The average spread for commercial mortgage loans in Q3 2024 held steady from Q2 at 183 basis points, a 35 bps decline from a year earlier. Multifamily loans also saw a slight spread narrowing to 168 bps. Attractive leverage conditions helped boost acquisition financing compared to both the previous quarter and the same period last year. CMBS single asset, single borrower markets maintained strong performance across asset classes, with high-value office transactions in New York City benefiting from increased debt liquidity and conservative leverage. Recent cuts in base rates, combined with the expectation of additional Federal Reserve rate reductions, have led some lenders to deleverage through substantial loan sales, optimizing their returns in a favorable capital market environment. Life companies led CBRE's non-agency loan activity, accounting for 43% of total closings, up from 33% last year. Alternative lenders, such as debt funds and mortgage rights, expanded their presence with a 34% share, marking a 27% increase from the previous year, as debt fund originations surged by 70%. Meanwhile, banks' share of non-agency loan closings fell to 18% from 38% the previous year, influenced by concerns over possible market distress and regulatory restrictions. However, syndicated loans on high-quality assets, such as industrial properties, multifamily units, and data centers, showed positive momentum. CMBS conduits accounted for 5% of total origination volume in Q3 2024, a 1% increase from last year. Total CMBS issuance, including single asset, single borrower loans, hit $29 billion, marking a threefold increase year-over-year. Underwriting standards saw minor shifts in Q3 2024, with average underwritten cap rates and debt yields rising 20 bps from Q2 to 6%. Debt yields increased by 15 bps to 9.9%, and the average loan-to-value ratio grew slightly to 62.8%. Lending on multifamily assets by government agencies rose by 40%, reaching $28 billion. The CBRE Agency Pricing Index, which monitors average fixed agency mortgage rates for 7 to 10-year loans, fell to 5.8% in Q3 2024 from 6% in Q2, though it was still above the 5.7% rate from a year ago. The government-sponsored enterprise segment was CBRE's fastest-growing area, with an 80% year-over-year increase, driven by lower base rates that enabled borrowers to secure higher proceeds compared to other financing options. We value your input. Your feedback shapes our content. Thanks for watching Pinvest TV.